So joining us now on Mooch FM, Saifedean Ammous. He's an economist, best-selling author, and educator, and frankly wrote what I think is the most brilliant book about Bitcoin. It was published in 2018. It's an essential book on the economics of Bitcoin, but I would also say that it's a super important book to just understand economics in general, which is why I loved it so much. And you got a new book out. Now, unfortunately, I don't have a copy of that yet. I did try to order it, but I have this book here. I just want to hold it up for everybody. It's the Bitcoin Standard, the decentralized alternative to central banking. Just a brilliant book. And I will tell you, when I got done reading it, one of our mutual friends, I called Michael Saylor. I said, tell the truth, did you read this book before you started putting billions of dollars to work in Bitcoin? And he confessed that he did. Fascinating. Let me go to some naysayers. And I love how you started this conversation, because I too, I would say to you that I didn't understand it. So my immediate reaction was to be a skeptic. And like yourself, I got to it early, but I didn't invest in it early, Doc. I waited until I had my epiphany. But there are naysayers. Warren Buffett says it's rat poison squared. His older brother says it's the worst thing that's ever happened to the civilization. Saifedean, it's the worst thing that's happened to the civilization. I mean, we've had atom bombs go off. We've had, world wars, but this is the worst thing that's happened to the civilization. What is it about these people that they're not getting it? Again, I don't want to speak in absolute terms because I've been humbled by the markets, but I have very high conviction related to Bitcoin. And so what is it about them that they're not getting, and why do you have such high conviction?
I think the main reason probably that most people don't get, well, there are many reasons. It's tough to say which one is the main one. As I said earlier, it's kind of insulting in its simplicity and in its audacity. You know, the idea that we can just have a currency outside of the control of the government is something truly audacious, which you can't really, which you'd naturally tend to be skeptical of. It's just not something that you expect to happen. I mean, world wars have been fought over money and over, the world wars where what switched the global monetary system away from Britain to the US. So it's natural to be skeptical of the idea that a bunch of software code is going to just replace that entire process. So there's this kind of intellectual skepticism, but there's also the kind of self-interested skepticism, which I think is, a lot of the skeptics need to really sit down and examine their fiat privilege, as I like to call it. If you've been active in the financial markets over the last 30, 40 years, you've been, particularly in the US and Western Europe and, the more advanced economies, and mostly in the US, you've been an enormous beneficiary of the current monetary system. The rules of the world monetary system are rigged in your favor. The global money, the entire world runs on dollars, basically. Dollars and derivatives of the dollars, which are equal to the dollar plus country risk, the national currencies. And all of these are being devalued every year through the inflation of the supply of the dollar. We're always making more dollars. So everybody who holds dollars is witnessing their wealth dissipate, and it is declining. And of course, the people who hold the dollars the most, the people for whom holding dollars is a big part of their wealth, are the poorest people. Rich people don't hold dollars. If you're worth $10 million, you don't have $10 million in a bank account or under your mattress. You've got maybe $500,000 at most in cash, and then the rest is in stocks and bonds and financial instruments and in debt. You've got a lot of bonds, and you've borrowed a lot of money. So when you're borrowing a lot of money, that debt inflation is good for you. Inflation is devaluing the value of your debt. So you use the debt to finance acquiring businesses and acquiring hard assets. You buy a house, you buy real estate, you buy a business, you buy hard assets. And these things go up in value because of inflation, and your debt goes down in value. So stocks go up in value as well with this inflation. So people who are holding money, the poor who are trying to make it in this world with, accumulating a little bit of money in a saving account, or trying to, the very poor people that are actually saving in physical cash, and a lot of these people exist in the world. They far outnumber the privileged few who can speculate on global financial markets. These people are witnessing their cash devalue every year. And the beneficiaries of that are the people who benefit from the large financial markets, the people who hold assets, the people who hold stocks and bonds and all of that stuff. So these people are benefiting from this. And I think, it might be worth looking back in the last 30, 40 years and just trying to think about how much you've benefited from that. And naturally ask yourself if that naturally makes you skeptical of Bitcoin, because Bitcoin would flatten the playing field. It would not allow rich people to continue to get richer by borrowing more and accumulating hard assets and then devaluing the money that poor people have in order to devalue the debt that they owe for these hard assets. You'd have to actually produce value. And so I think a lot of people with fiat privilege are naturally skeptical of Bitcoin. And then there's the kind of, the intersection of the intellectual and self-interest is the kind of, the modern economists, the Paul Krugmans and all the Nobel Prize economists who don't like Bitcoin. These guys are at the intersection of both because their jobs are financed by central banks. Modern economic departments are essentially central bank propaganda. And so they get paid by central banks. They have their entire worldview is shaped around the idea that the central bank controls the money supply, and it's our job as economists to tell the central banks what to do and how to fix the money supply and how to make it better. And then Bitcoin is like, Uber for the taxi medallions in this situation. It's just telling them, no, your entire medallion industry shouldn't be there. We've got an app that replaces all of that and does it much more conveniently, and the cars are cleaner and it works better, and it's much easier. So there's a lot of that angry taxi cab driver energy when it comes to Bitcoin skepticism.
I appreciate it. I think it's very well said, and I'm certain that the fiat standard goes into a lot of this corruption of fiat currency and how it actually hurts the poor. And I grew up in a middle class family. My dad worked for his money. He was an hourly worker, and he was making enough of a wage. It's just interesting. After they took the U.S. off the gold standard, you could see declining living standards for laborers because they were devaluing the money aggressively and the wages never caught up. But in the 60s and 70s, we did live in the middle class. I would never dishonor my dad's work ethic by telling otherwise. But I do remember the anxiety and struggle, inflation-based struggle. Let's talk about something that is near and dear to me, which is rising demand for Bitcoin without any possibility of an increased supply. So what happens, Professor? Does Bitcoin go up forever as a result of that?
Yes, as Michael Saylor famously put it, Bitcoin's going up forever, Laura, forever. I think that was also one of the key points in my book, which is that Bitcoin is unique in this regard, that all other assets that we have ever had as human beings, as demand for the asset increases, the reward for producing more of it increases, and that just naturally means people are going to make more of it. Now, the best money that humanity had ever come across at the end of the 19th century, the whole world was on a gold standard because it was the form of money that resisted this best. Because gold, because of its chemical properties being indestructible, means that we're always accumulating all of the previous year's gold production. And so each year's annual production, even if it goes up, even if everybody's looking for gold, even if everybody is really trying to make as much gold as they can, it's only going to be a small fraction of the total existing stockpile. So annual supply of gold grows at around 1.5% per year, 2% maximum. That's just how much more gold we find each year. And the better we get, yes, we might make a quick jump this year if we get really better at digging up gold, but then that's just going to be added onto the stockpile of the existing gold that we have. And so then it's going to make the existing stockpile larger, and then next year's the new production is going to become progressively smaller again. So Bitcoin takes this one step further. It's not just about the chemistry, it's about the mathematical properties, where the supply of how much Bitcoin is going to be produced is predetermined. Regardless of whatever else happens in the world, we have a set schedule of Bitcoin. And that's for me perhaps the most mind-blowing thing about it. If 5 billion people want to use Bitcoin tomorrow, we're only going to make 900 Bitcoin tomorrow. And if 5 people only in the entire planet want to use Bitcoin tomorrow, we're only going to make 900 Bitcoin tomorrow. That's just how it works. And that's the schedule is preset. And then Bitcoin has this thing called the difficulty adjustment, which is what happens is, yes, the price of Bitcoin goes up if there's more demand. So there's a bigger reward for you and I to go and mine Bitcoin. But the way that Bitcoin mining works is that the more people get in, it doesn't produce more output like gold mining or copper mining. If you double the amount of people mining gold, you're probably, well, maybe not double the amount of gold that is being produced, but you're going to increase it significantly. And the same is true for copper. The same is true for oil. The same is true for government money. The same is true for government bonds. We see it as demand for bonds increases, governments can borrow more and they can spend more. And we see it in all assets. Well, with Bitcoin, it's more like a sports tournament where there's only going to be one trophy. There's only one gold medal at the Olympics for the 100-meter dash. And if more and more people compete for that, it just makes it harder for you and I to win that gold medal. It doesn't cause there to be more of these medals. So it's quite unique in that regard, that the supply is predetermined, and then the world has to readjust to that. And once you realize this, you realize that, yeah, the only way that you adjust to that is not to try and make more, is to try and get as many of the ones that exist today. That's why Michael Saylor says as soon as you get Bitcoin, you're overcome with the feeling that you're incredibly short on Bitcoin. The problem we have with the current monetary system is that there's no good store of value. There's nothing that the central banks can give their people that they can hold as a way to store value into the future. And so people are jumping with their money from one market to the other, using it as a saving account. People use their houses as saving accounts, and that causes a housing bubble. They use their stock market as a saving account, and that causes a stock bubble. The stocks become overvalued and then they crash. They use government bonds, and that causes the mother of all bubbles, which we're watching right now, where governments get to spend infinitely. All of that is because there's no reliable store of value. And all of that is because the current monetary system monetizes debt. So it encourages people to take on debt, and it encourages people to issue more debt. Well, Bitcoin provides us an alternative. We no longer need to park our money in debt. We no longer need to invest in mortgages. We no longer need to invest in corporate bonds or government bonds. We can just put our savings in Bitcoin, and then that won't create debt, and then that won't create all of that instability that follows from debt. And so I think there is an optimistic case in which Bitcoin continues to grow, and the fiat and debt economy continues to do what it does, which is, fiat devalues over time, and that just leads to a decline in the value of fiat. And that's a decline in debt. And now the majority of the world is in debt. Nobody has, at least nobody rich and powerful has savings in dollars. So if the dollar goes down, everybody's debt problems are resolved. The problem without Bitcoin is if the debt goes down, well, then, people's savings collapse. Like if the bond market collapses, well, the U.S. government is free from all of its debt, which is good for the U.S. government. But it sucks for all the people who bought bonds, who now have to go, don't have savings. Well, Bitcoin allows you to, slowly shift your savings away from bonds to Bitcoin. And then as the bond market declines in value and in real terms, everybody who's at danger from losing their livelihood and savings can basically fall back on the fallback plan of Bitcoin. So on the one hand, people tend to focus on the idea that Bitcoin is going to replace the dollar, so Bitcoin is going to kill demand for the dollar, so we're going to have a Venezuela in the US. And I make a case for why that's not likely, which is that Bitcoin doesn't replace just the demand for holding dollars. It replaces the supply of dollars. It replaces the mechanism for creating dollars, and that's debt. And the reason we create so many dollars is because people want to lend. Back in 2006, everybody in the world wanted to invest in mortgages, and the U.S. banks were giving mortgages to anybody because pension funds from all over the world thought that U.S. housing is the most safe thing. So the demand for debt generation is coming from the lenders, basically, who have no better choice than issuing debt in order to hold their savings into it. So Bitcoin undermines that. So now we don't need to give everybody a mortgage. We don't need to give every government $1 trillion money in order for them to issue bonds. And then we can just, slowly inflate the value of the debt away and move the savings into Bitcoin.
Fascinating stuff. The book is called The Fiat Standard. The first book is called The Bitcoin Standard. I recommend it to all students of investing, economists, etc. Give us your take on the crypto hearing in Congress this week. What was your reaction to that?
To be honest, I don't follow U.S. politics very closely. I think it's kind of encouraging that the focus seems to be that Congress is beginning to see how how Bitcoin is not a threat to the U.S. dollar. I think that's from a practical perspective, that's probably a good thing in a regulatory idea. I think people are realizing that the stable coins are driving up demand for the dollar, and that kind of appeals for the political class in the US, which is kind of concerned about the role of the dollar. So I think it's encouraging. I mean, there are some negative politicians like Brad Sherman making all these negative comments about the issue, but I think we've come a very long way. If you told me 5 years ago or 7 years ago that today Bitcoin would be this big and politicians would be discussing it this favorably, that we'd have a senator and several congressmen who are open about the fact that they own Bitcoin, I would have been completely surprised. So, you could focus on the negatives, but I think it's quite positive. And I think somebody like Michael Saylor in particular has played a massive role in communicating the idea that, look, guys, this is technology, and you don't fight technology by sticking your head in the sand and hoping it goes away. You're just exposing yourself. And I think the smart, the brave, the honest, the powerful thing to do is to confront it head on and take advantage of it. And I think I'm encouraged to see that in the US, it seems to be that the majority is heading in that. Well, majority is a big word. I think the majority is undecided up until this point, but I think there's more momentum on the side of the people that are willing to embrace the technology. Whereas in China, we see the opposite.
Yes, and I think that the couple of things there that I'll just share with my view quickly. Bitcoin is property. And in the West, property rights are sacrosanct. And so even if they were trying to ban it in the United States, Safidean, they would have to go through the administrative court system. And these property rights date back 900 years to British common law. So it'd be very, very hard to knock out Bitcoin. And the other point is you've got a bee swarm of 73 million Coinbase accounts. 46 million people in the United States own Bitcoin, from what we can tell. And that's a small batch lobbying force that the Congress has never seen before. They don't want to upset that hornet's nest. So those are my opinions there. I think this is the regulation here is going to be reasonably benign, and it'll be long-term good for the country. You've got two great things going on. I mean, many great things, but two things I want to share with my listeners. Saifedean.com. Tell us what's there, and also tell us a little bit about the Bitcoin Standard podcast, which I happen to be a subscriber to, and I want to send my listeners your way. So tell us about both those.
Yeah, so Saifedean.com is my university. I used to be a college professor when I wrote the Bitcoin Standard, and then I decided to do to take my job on the road, basically on the web. So now on my website, I teach economics courses. You can take 4 econ courses, 3 econ courses and 1 Bitcoin. Well, one is econ and Bitcoin. So 4 courses in total on Bitcoin and economics. 2 courses that are an introduction to economics from the Austrian perspective, principles of economics. So these are on the website. If you join as a member, you can take them. And then if you join as a member, plus you'll join our 2 weekly seminars. We hold 2 seminars every week where we discuss, the members of the website, we get together and we talk about Bitcoin and economics. And about once a week, we get a guest to join us on those seminars. And then we release these as the Bitcoin Standard podcast. So we've had, Michael Saylor join us many times. And in fact, I'm recording with him again today. So there's going to be another Saylor episode soon. And it's people from the Bitcoin space, from economics in general. And we discuss all kinds of different issues on economics. And I'd say, it's slightly different from the kind of perspective that you usually would get from mainstream media. We've got a good, loyal listener base that continues to grow, and I'm delighted to see you're a part of it.
Well, listen, I'm a part of it. I want to recommend it to others. It's Safidean.com and the Bitcoin Standard podcast. And of course, I want to thank you, even though you and I have not personally met. Your words and your books have moved me enough to, our firm, Skybridge Capital, we have over $1 billion of exposure to Bitcoin right now. And so we owe you that. So thank you. I would also say thank you to Michael Saylor as well. And hopefully you'll come back.